Hi there, this is Michael Elliott. I'm a CPA and the co-founder of The Agents Accountant. We're an accounting firm that specializes in working exclusively with real estate agents. Today, just wanted to talk to you for a couple of minutes about retirement plan options available to real estate agents. As we all know, real estate agents are self-employed. Whether you're self-employed as a Schedule C, maybe you're an LLC still filing as self-employed on your personal income tax return, or maybe you're an LLC filing as an S corporation, or you're in partnership with someone else. But as a real estate agent, you're generally, from a tax perspective, considered self-employed. Now, you might be thinking, well, I'm self-employed, so therefore I don't have a 401k, or I don't have a corporate retirement account, a pension, or something like that. What's available to me? Well, as a self-employed real estate agent, again, whether you're self-employed on your personal tax return or filing as an S corporation, there's a whole bunch of different retirement plan options that might be available to you. And I just want to run through those with you. So from the most basic perspective, available to almost all real estate agents would be a traditional or Roth IRA. Traditional Roth IRA allows you to invest up to $7,000 per year if you're under 50, plus an additional $1,000 if you're over 50 years old. If you put that into a traditional IRA account, that $7,000 or $8,000 would be tax deductible for you. That is going to come right off your income tax return. So if you make a $7,000 traditional IRA contribution, likely that's going to generate you somewhere between a 10 and a 30% immediate return in tax savings on your personal tax return. Now, traditional IRA involves putting the money in up front, taking a tax deduction for it. The money then grows tax-free when you take it out after the age of 59 and a half. You can take it out penalty-free, but it would be subject to ordinary income taxes down the road. However, if you're sort of a new agent, just starting out, maybe don't have a significant amount of net profit, traditional IRA contribution could be incredibly valuable to you. Very easy, low-cost way of putting some money into a retirement plan and still generating a little bit of a tax deduction. Right along with that, you would also have a Roth IRA, similar to a traditional IRA, but its taxing effects are basically flipped. When you put that $7,000 or $8,000 into your Roth IRA, you don't receive an immediate tax deduction for that. However, you put the money in, no tax deductions available to you, but that money grows tax-free just like it does in a traditional IRA. But here's the big key. When you take that money out someday, when you're older than 59 and a half and you take that money out penalty-free, you also take it out income tax-free. So depending on your personal income tax situation, it may be beneficial for you to consider, rather than putting it into a traditional IRA, potentially looking at doing a Roth IRA instead. Could be an incredibly valuable addition to sort of your tax repertoire, your wealth building system. Talk to your financial advisor, your accountant about those options. So that's the most basic level of what retirement option is available to a real estate agent. After that, we've got a couple of more sophisticated, meaning there's a little bit more paperwork. There's probably a little bit more in the way of setup fees, needing to get your financial advisor involved. A couple of additional options that are available to you as a self-employed individual or as the owner of your S corporation. So the first is a SEP IRA, SEP IRA. That is a more sophisticated retirement account. It's sort of a self-employed pension account. You can think of it like that. And it allows you to put up to $70,000 in 2025, up to $70,000 into that account and take a deduction. I mean, think about that. If you're an agent today, that maybe this year in 2025 you're going to be having net profit of $300,000, $400,000, $500,000. Your income tax rates are probably going to be more than 30%. And so think about the tax benefit of being able to dump $70,000 into a SEP IRA. That's going to generate tax savings this year of $30,000, maybe $40,000. Imagine being able to take that $30,000 or $40,000, putting a down payment on a rental property that maybe generates you passive income of $400 or $500 a month from now until you decide to sell it. It's an incredible wealth building tool when we're able to put that amount of money into a retirement account like a SEP IRA. That one's typically available to self-employed individuals filing on Schedule C on their personal income tax return. After that, we also have a solo 401k or a single 401k, sometimes it's referred to, that allows you to put an employee contribution into the 401k and also an employer match into that 401k as well. And remember, you're both the employee and the employer. But you can put you can put up to $70,000 or more into that account on an annual basis and take a deduction. Again, potentially saving $20,000, $30,000, $40,000 on your income tax return by using that single or solo 401k. So there's a lot of different retirement plan options out there. Just because you're self-employed, just because you're a real estate agent, doesn't mean there are not options available for you to consider. So what I would ask you to consider is, I would say, look, as a real estate agent, you need to be living not just paycheck to paycheck, not just commission to commission, close to close, but you need to be building wealth for the future. And retirement plans are a great way to do that. And they're also an incredibly tax efficient way as well. We'd love the opportunity to be able to talk with you about what those options are, how we can help you build wealth as a real estate agent. Go to our website, agentsaccountant.com. And we've got information and articles there to kind of help you. And if you're curious about how we can serve you and your business, feel free to reach out.